All right, good afternoon, everybody. Today we're going to be talking about, I don't want to say it's kind of like an exit strategy, but it's, I guess, a pull the fire alarm as you're heading down the staircase and trying to moonshot yourself up to where you want to be. So in the case of emergency, the market pulls back 25, 30%. This is kind of my strategy. It's going to be kind of a three-fund approach, if that makes any sense. And I'll kind of give you guys a highlight as to what it is. One of them involves a collared ETF, specifically around the Nasdaq 100. One of them involves the Nasdaq 100 as well, and one of them involves the total stock market index. So if you guys are very familiar with my M1 finance portfolio, it's kind of like where I put all my passive money. Put about $500 twice a month in there, so about $1,000 a month. You guys can copy that in the description below. I'll leave a link for you guys. But even in my broader portfolio, in my individual brokerage account where I invest like into most of my individual stocks, I've started to move some of those auxiliary positions into kind of a collared ETF. And a lot of folks have already talked about it. So Dave from Hidden Freedom Investing has talked about it. GW from GW Life TV has also done the same. And so I think it's a good strategy. It's got some good downside protection, which is what the collar is for. So I'll walk a little bit through that as well, because it involves a lot of the strategy that we kind of saw back in March of 2020. And had I had this sort of strategy involved, probably would be about $200,000 richer at this point. So in this particular example, want to give you guys a good little intro about it. Hopefully it helps. And I guess let's just hop right into the computer and talk a little bit more about it. All right, everybody. So now that we're actually over here into the desktop, we can actually see a little bit about the M1 Finance portfolio that I've kind of been talking about. So I would say about 90 to 95% of you guys should probably just be investing in the VTI or Total Stock Market Index. If you want to get a little bit more technology exposure in there, QQQ is about 47%. VTI, on the other hand, is only about 25 to 30-ish%. So if you want a little bit more weighting towards technology, maybe you can throw it in. I personally do about a 50-50 split between the two main portions of the portfolio. And then I couple that with Nusi, which is kind of a QQQ collared ETF, which I'll touch on in just a moment, and hopefully give you guys an idea as to what that is trying to achieve. And then I sprinkle a little bit of QQQJ in there for some frontier sort of next generation Nasdaq companies, so maybe some new companies that are going to come in into the future. But specifically, this strategy revolves mostly around Nusi, which is basically a QQQ fund that provides obviously some income and also provides a little bit of downside protection. Now, what I'm going to go through in this particular video is a little bit about how this potentially limits your upside. So keep in mind that this might not necessarily be for everybody, specifically someone that's super young in their portfolio, but it provides an opportunity for downside protection as well, which is awesome. And we'll touch a little bit more about that when we get into it. But so this is Nusi. So it is basically the Nasdaq 100. It holds about 100 different positions, and then what it does is it will also take the 100 positions, not sell covered calls against those, but what it'll do is it'll sell calls rather against the Nasdaq 100 index. And so we'll touch a little bit more on that. I have a graphic kind of set up to hopefully give you guys an understanding of that. And so with that selling of covered calls, let's just say 1.5–2% above the money, they'll be able to take in, let's just say, a couple $1 million. And with that couple $1 million, they will then go out to the market and purchase puts, which will then allow them to be protected on the downside in case of, say, a black swan event. And so if we were to kind of look specifically at what had happened in the February and Marchish timeframe, kind of going into Nusi a little bit, you could see that it did decline. It only declined, though, about 10 or so percent comparing to the rest of the market. I pulled this 5-year chart out, but it's a relatively new fund. But you can see it went from 26, 28-ish to the 23, 23.50-ish. So in that respect, the total drawdown for the portfolio in terms of peak to trough was about 10 to 12%. So not very much. When you were to compare that to, say, a QQQ, for example, you saw drawdowns in the order of about 30%, going from a pretty big substantial drop there. And the same thing with the Vanguard. I mean, just look at this shoulder here that you can kind of see on the Vanguard VTI sort of fund here, going from 170 down to the almost 100, 117-ish range here. Pretty big drop here, about 32%. And of course, if you were to take the very, very bottoms, I think that both of those funds, the Tqqq and the VTI, were probably down about 35% at their worst. Now, I think what you guys need to recognize with this is if you were to say time the market, I'm not a big component of that, or proponent of that rather. A lot of people try to say, well, I'm going to take money off the table, this and that. I believe fully in just having a lot of my money in the market working for me at any given moment. I've had times in my investing career where I've said, hey, I'm going to sit on a bunch of cash. And when there's a drip, like a dip back in, let's just say 2015, I was very big in this. Market's high, market's high. You know, I was very bearish at that point. Not a very big believer in just throwing money into the market. And unfortunately, what that meant is I was just sitting around, and we didn't really have a substantial pullback until March of 2020. We did have 5-10% pullbacks, and we did have some 15% pullbacks at times, specifically in early February of 2016, followed by December of 2018. But the major pullbacks were really March 2020. And so I'd been waiting around for 5 years in that respect, waiting for a pullback and missing out on massive amounts of gains. I mean, if you were to just look at, say, the Qs here from June of 2020 or June of 2016, April 2016 to where we are today, we're up over 100%. And so if you had waited, you would have been probably waiting on a very unlikely scenario, and then also would have been losing out on a lot of opportunity costs associated with that. So let me introduce you to something called the, actually, before I do this, let me actually hop out of this and kind of show you the Microsoft Paint. Sorry, I'm working on some thumbnails here. But what we actually have here is the Nasdaq 100 index here. Actually, this is the Nasdaq Composite Index. But anyway, basically what ends up being done here is they take, Nusi specifically, takes the index here and sells covered calls, and then they buy protected puts. And so what this is basically called is a collar, basically saying that you're kind of limiting your upside, but at the same time you're limiting your downside. What this allows you to do is kind of look a month or so out from where you're kind of at and kind of sell options, sell an opportunity to limit your downside in case the market decides to pull back, but also potentially limit your upside in that respect. And what it ends up doing is it provides a little bit of income. So about 7.5% a year in terms of annual income. So expect about 0.5%, maybe 0.6, 0.65% monthly yield from the portfolio. So if you have about $100,000 in there, expect about $600 a month, or maybe even more coming from the portfolio. By the end of the year, you should hopefully make yourself about 7.5%. But this has benefited more specifically for the folks that are wanting to limit their downside. A lot of folks, we've been kind of talking about QILD as of late, and that's a great opportunity. They don't sell protected puts, or they don't sell covered calls or sell calls in order to buy protected puts and QILD, for example, though. So in that particular case, when we had a March 2020, you saw a substantial drawdown in the amount of funds. But going back into what Nusi actually does, they have the 100 underlying shares of all these different companies, and then what they do is they just sell a call on the Nasdaq 100, and they're able to generate income from that, $2 to $3 million associated with that, and then to say, hey, you know, with that, we're going to buy this put. And so in this particular case, if you look at the prospectus of what we kind of have here in November 2020, this is basically what they had on the books. And so they basically said, hey, by December 18th of 2020, we're going to have a protected put here at 11,375 on the index. And then we're also going to pay for that by exercising a $12,100 call on the index as well. So this might not work verbatim because this is a little bit off of, this is obviously the Nasdaq 100 index, not necessarily the Nasdaq Composite, which I'm showing here. But to give you a brief idea as to what they're looking at, you can obviously see that in the November timeframe, they're selling monthly options here. So by mid-November-ish timeframe, they're probably looking at about this time and say, hey, you know, what can we sell in terms of limiting our upside, potentially still getting that upside, but also in the case of a downside, protecting ourselves, right? Selling 4 to 5% below where we're at in terms of at the money at the moment to be able to buy more. And so that allows you to say sell $2 to $3 million worth, and then take that $2 to $3 million, take a portion of it to buy these protected puts. So in the case of what happened in March of 2020, let's just take a quick look at that again. You were able to really limit the amount of drawdown, whereas all these other funds, were going down, let's just say 20, 25, 30%. This one was only able to go down about 10%. So you're definitely limiting the downside and definitely protecting yourself, utilizing those protective puts. Now, going into an example lately of what we were kind of looking at here is they were selling about the 13,3750 or 13,375 calls, and then taking that money and buying the 12,975 or 12,950 puts. And so that kind of puts the bracket in here in terms of what the price can be. And what we did actually end up seeing is by mid or end of February-ish time frame, it actually did touch the 12,975, which I thought was interesting. But comparatively, over the past month, sort of kind of going off the cuff as to what I wanted to kind of share. But at the same time, you can see that Nusi, its own, pulled back about 4%, whereas if you were to compare that to the Nasdaq 100 or Tqqq in this particular example, it pulled back like 8 or 9% since its recent highs in mid-February timeframe. So that being said, I think it's a good opportunity to look at, hey, you have an opportunity to potentially protect your downside, but at the same time, comparing year over year, just quickly, just kind of sharing this, the capital appreciation is only 10.5%, whereas on the Qs, you're looking at closer to 50%. So inclusive of that 7.5% dividend, you're going to get close to 17, 18% return year over year for Nusi since last year, whereas Qs right now, you're looking at a closer to 50% return. So you are paying in terms of upside, limiting, let's say, growth if you want this downside sort of protection. So keep in mind, this could be something for somebody that's closer to retirement or something of the like. However, if you are seeking sort of a dividend portfolio, what I envision for me to potentially use this in my portfolio is have a portion of my money in the Qs, have a large portion of my money in VTI, have a large portion of my money in Nusi as well. And on a given drawback, let's just say you have a 20, 30% drawback. Let's just kind of use March 2020 as an example of what happened to this triple leverage Tqqq strategy, which is where I would eventually roll my money into and rotate it into. You go from about $57 a share down to $17.76 a share, which is approximately a 70% drawdown from peak to trough. Now, somebody might say, wow, like, why would you want to put yourself through a 70% drawdown? Well, I'm not going to. I'm going to have my money sitting in Qs. I'm going to have my money sitting in VTI. I'm going to have my money sitting in Nusi, and I'm going to let these take the majority of the hit, right? And so in the meantime, let's just say we do pull back 20, 30%, you'll see Tqqq pull back 60, 70%. And if you just kind of look at what Tqqq has been able to accomplish since we've had the ride back up to, I guess, the promised land, as we're kind of trying to put it here, you went from 1776 a share at its worst in March of 2020 to $89 a share. So if you just kind of look at it that way, you went from 89 minus the 1776, divide by 1776 to be able to get your return, and you had about a 400% return in the same time period. Whereas if you were to do the same, the Qs did great, right? Like, you can't complain. The Qs also did really, really well. So we went from 314, and at its bottom here in Marchish, we were at 170. Divide that by 170, we returned 85%. So I mean, if you're going to be long in the Qs, let's just say when the market does pull back and you say, it's a great time to buy the dip, consider looking at Tqqq. Consider looking at buying leaps on Tqqq. Yes, you will pay a premium. There's always going to be a premium associated with buying leaps, especially when volatility spikes up, when you have a market pullback. But the opportunity is great, especially if you have something like what we saw in March of 2020, where you have this large movement out of the market, people pulling money out, stock prices falling through the floor, you will have increased volatility. But if you have this sort of V-shaped recovery that we did have in March of 2020, if you kind of go back, immediately kind of came back, looks like the damn Nike swoosh, have an opportunity for large, massive gains here in relative quick succession. Imagine buying leaps in March of 2020 on Tqqq. And imagine just sticking to QQQ. Imagine just sticking to VTI when they did pop back. And I think that was a large part of my loss of my strategy here. Is I was buying individual dividend stocks at the time. I was still obsessed with dividend income to make sure in the long term I had that opportunity to, I guess, get the dividend income in the case of need, say if I got laid off or something of the like. But in this particular strategy, I think that this is a way that you can make money in quick succession, take advantage of any sort of bull markets coming forward. And what then you can do is, if you say make enough and you say, hey, all I needed was 1.5 million, or all I needed was 800,000, then you can move it back into a Nusi or something like that, where you will still get that capital appreciation over time, but it would be limited in, say, 1% to 2% a month. In the case of any sort of pullback, you would be limited, slightly to the downside. And say there's a 20-30% market pullback, Nusi might only see half of that. Nusi might only see 10% of that, based off of what we kind of seen in more recent times over the past week, where we saw the Nasdaq pull back 8%, but Nusi only pulled back 4%. And what we saw in March of 2020, where the broader market pulled back about 30%, maybe more, and Nusi only pulled back about 10% or 12% in that same time period. So provides you that opportunity that if Nusi only pulls back 10-20% and you have a pullback in Tqqq, which is triple leveraged, 70%, well, you just basically are moving all your money from, and not trying to time the market, but now you just have this money that's sitting only 10% down, moving into something that's 70% down and is triple leveraged to the bullish side. Gives you an opportunity to take advantage of any recovery in the markets. And so, yeah, that's kind of the evolved strategy at the moment of what I'm looking to do in the event of a huge market pullback. So appreciate this. Hope this video finds you guys great. Hope it finds you guys well. If you guys are still watching and you are interested in my M1 Finance portfolio, find that in the description, and I'll see you guys on the next video. Cheers.